Hey everyone, welcome back to the show. Today we are going to be doing another deep dive. And this time, we're going to be taking a look at what's in store for the global economy in 2025.
Sounds good. I'm excited to talk about this.
Yeah, especially with all this, trade uncertainty going on, it feels like nobody really knows what's going to happen.
Yeah, for sure. A lot of uncertainty out there.
Yeah. So to help us make sense of it all, we're going to be looking at this report from Goldman Sachs Research. It's called Macro Outlook 2025. Tailwinds, probably Trump tariffs. So obviously, they're focusing on, the reelected U.S. president and the impact his policies might have on global trade.
Right. And it's a really interesting report. They try to answer that big question on everyone's mind.
Yeah.
Can the global economy actually keep growing, even with all this potential disruption coming from the U.S.?
Right. Because on the one hand, you have like the president talking about, putting America first and kind of shaking things up on trade. But then on the other hand, like the global economy is so interconnected these days that you have to wonder what the ripple effects will be.
Yeah. And it's not just about the U.S. Other major economies like the Euro area and China will definitely be affected too.
So what's the verdict? Should we be worried or optimistic?
Well, you might be surprised to hear this, but the report is actually pretty optimistic. Despite all those potential trade headwinds, they think global growth is going to stay pretty solid.
Oh, wow. Really? I was expecting something a lot more doom and gloom, honestly, with everything going on.
I know, right? But they're actually starting with a pretty positive forecast. They're predicting 2.7% global GDP growth for 2025.
Okay. So 2.7% global GDP growth. What does that actually mean for those of us who, don't have economics degrees?
Yeah, good point. Well, basically, it means the world economy is expected to keep expanding at a healthy pace. That's in line with the 2024 estimates and even a bit higher than what some other analysts are predicting.
So that's a good sign, right? It means more investment opportunities, more jobs, hopefully just overall a more stable economic environment.
Exactly. It's definitely a positive sign. And the report also points to a few other encouraging factors that are contributing to this growth.
Oh, like what? What kind of things are they talking about?
Well, for one thing, they highlight more balanced labor markets globally, which basically means more people are finding jobs, and those jobs are better suited to their skills.
Okay, that makes sense. And what about inflation? Because that's been a huge concern for everyone lately.
Yeah, you're right. Inflation has been a big worry. But thankfully, the report says we're actually starting to see a decline globally. That's great news, right?
Definitely. That takes a lot of pressure off businesses and consumers. So things are looking up on the inflation front. That's good.
And on top of that, we're seeing central banks around the world starting to normalize interest rates, which can help to keep inflation under control and support sustainable economic growth.
Okay, so that all sounds pretty positive. But I'm guessing this growth isn't going to be evenly distributed across the globe, right? Some regions will do better than others.
Right, you are. The report highlights some pretty interesting regional variations. For example, they predict that the U.S. economy is actually going to outperform other developed economies.
Interesting. So even with all the talk about trade wars and protectionism, the U.S. is still expected to do well.
Yeah. It's a bit of a surprise considering all the potential negative impacts from the re-elected president's policies.
Right. Like what specifically are they worried about?
Well, for starters, there's a possibility of even higher tariffs on goods from China.
Yeah, I remember him talking about that during the campaign.
Right. And there are also potential tariffs on imported cars, which could disrupt global supply chains and raise prices for consumers.
Right. And then there's the whole issue of immigration, which has obviously been a big focus for the president. And the report suggests that lower immigration could actually hurt economic growth in the long run.
Interesting. So with all those potential headwinds, why are they still so bullish on the U.S. economy?
Well, they point to a few key factors that are driving this growth. For one, the tax cuts that were implemented a couple of years ago are still having a positive impact on businesses and investment.
Okay, that makes sense. So businesses have more money to invest and expand. Right. And then there's the fact that the U.S. has a generally business-friendly regulatory environment, which makes it easier for companies to operate and grow.
Gotcha. So less red tape, more freedom for businesses to do their thing.
Exactly. And finally, they talk about something called improved animal spirits among businesses.
Animal spirits, what does that even mean?
It's a bit of a quirky term, but basically it refers to a renewed sense of optimism and a willingness to invest and take risks among business leaders. It's like they're feeling more confident about the future and ready to put their money where their mouth is.
Okay, so it's like a psychological boost for the economy. It's interesting that they would include that in their analysis.
Yeah, it's not something you typically find in an economics report. But it definitely plays a role in shaping business decisions and overall economic performance.
And there's another point they make that I found really fascinating.
Oh, what's that?
They say that U.S. labor productivity is actually growing faster now than it was before the pandemic.
Wow, that's really impressive, especially with everything that's been going on. The pandemic, the supply chain disruptions, all that.
Yeah, I know, right? It's almost counterintuitive. But it seems like American workers are getting more done with the same amount of resources.
Yeah, and that's a really positive sign for the economy because it means higher output, potentially higher profits, and maybe even more job opportunities down the line.
Right. That makes sense. So even with all the uncertainty surrounding trade and everything else, it seems like the U.S. economy has some pretty strong fundamentals in place.
It does.
Yeah.
And it's interesting to compare that to the euro area, where productivity growth has actually slowed down in recent years. That's one of the reasons why the report is a bit more cautious about their economic outlook.
Okay. So the U.S. is kind of in its own lane right now. It's
Yeah.
interesting how these different regions are diverging in terms of their economic performance.
Yeah, it's definitely something to watch.
Hmm.
As an investor, or just as someone who cares about the global economy, it's important to pay attention to these regional differences and understand how they might play out in the years to come.
So what about inflation in the U.S.? I mean, with all these potential tariffs, wouldn't that drive prices up?
It's a valid question, but the report suggests that U.S. core PCE inflation will actually slow down to 2.4% by late 2025.
Core PCE inflation. Sorry to interrupt, but can you explain what that means? Like for normal people?
Oh, sure. Yeah, that's economist jargon. It basically refers to inflation that excludes food and energy prices
Hmm.
because those tend to be really volatile and can skew the overall picture.
Okay, that makes sense. So they're looking at the underlying trend in prices without those big swings from things like oil and gas.
Exactly. So even though inflation is expected to come down a bit, they do acknowledge that different tariff scenarios could have an impact.
Like what kind of impact are we talking about?
Well, for example, they estimate that if the U.S. were to impose a 10% across-the-board tariff on all imports, it could push inflation up to 3%.
Wow, so that's pretty significant difference just from one policy change.
Yeah, it shows how interconnected everything is. But even with that potential increase, they're still seeing a downward trend in inflation globally, including in the euro area.
Okay, so it's not all doom and gloom on the inflation front. It seems like things are starting to stabilize a bit.
Yeah, and the report actually points to this decline in inflation as a positive development because it gives central banks more flexibility to adjust their monetary policy and support demand without worrying about inflation spiraling out of control.
Okay, that makes sense. So it kind of creates a more stable environment for businesses and consumers to make decisions.
Exactly. It takes some of the pressure off and allows central banks to focus on supporting economic growth.
All right, so we've talked a lot about the U.S. economy, but what about the rest of the world? How will these potential U.S. trade policies affect other economies?
That's a great question, and it's where we start to see some potential challenges. The report is pretty clear. The economic headwind from U.S. trade policy is expected to be greater outside the U.S. itself.
Oh, wow. So the U.S. might be insulated to some extent, but other countries could really feel the pain.
Yeah. It's like they're saying the U.S. is kind of charting its own course, and the rest of the world has to figure out how to adjust.
It's fascinating how the U.S. economy seems to be in its own little bubble right now. But what does this mean for the rest of us? What are some specific examples of how other countries might be affected?
Well, for example, the euro area could see a 0.9% hit to its GDP because of this increased trade uncertainty, compared to just 0.3% in the U.S.
Wow. So that's a pretty big difference. Why do you think the impact is so much greater outside the U.S.?
Well, there are a few reasons. First, many countries are simply more exposed to trade with the U.S. than the U.S. is to trade with them. So any disruptions in U.S. trade policy will naturally have a bigger impact on their economy.
It's like a domino effect, right? The U.S.
Yeah.
makes a move and the ripples spread outwards.
Exactly. And secondly, some countries, especially those in the euro area, rely heavily on exports to the U.S. for their economic growth. So if the U.S. economy slows down, or if American consumers buy fewer imported goods because of tariffs, that can have a big impact on those exporters.
That makes sense.
Yeah.
So it's not just about the direct impact of tariffs, but also the indirect effects on demand and economic activity.
Right. It's a complex web of interconnections,
Yeah.
and it's hard to predict exactly how everything will play out.
So it sounds like some countries could be in for a rough ride, but didn't you mention something about some countries actually benefiting from all this?
Yeah, that's right. It's not all doom and gloom. As U.S. imports from China potentially decline, there's an opportunity for other countries to step in and fill that gap.
Hmm.
We could see a shift in manufacturing and production to countries in Southeast Asia, for example, or even back to the U.S. in some cases.
Oh, interesting. So there are potential winners and losers in this global trade reshuffling.
Exactly.
Hmm.
And that's something for investors and businesses to keep in mind as they navigate this evolving landscape.
So this is all really interesting from a big picture perspective, but how does it actually affect people's lives? Like, what does it mean for our jobs, our investments, our future?
That's the key question, isn't it? We've been talking about GDP growth and inflation and tariffs. But how does this all translate into real-world implications?
Yeah, because at the end of the day, it's not just about numbers on a spreadsheet. It's about how these global trends affect our everyday lives.
Absolutely. So let's say you're an investor looking at the global landscape.
Yeah.
This report suggests there's still plenty of opportunities for growth, even with all the trade uncertainty.
But it also sounds like you need to be pretty strategic, right? Like you can't just throw your money anywhere. You have to really understand the nuances of different regions and sectors.
That's right. You have to do your homework.
Hmm.
For example, if the U.S. economy does outperform as predicted, that could create some really attractive investment opportunities in certain U.S.-based industries.
Right. But on the flip side, you also have to consider the potential risks. What happens if those large-scale tariffs do become a reality? How will that impact global supply chains and consumer prices? Could that eat into those potential profits?
Exactly.
Yeah.
You have to weigh the risks and rewards carefully. And you also have to think about the ripple effects on other economies. If the euro area's growth slows down, what does that mean for European companies and markets?
And what about the potential for some emerging markets to benefit as trade shifts away from China? It sounds like there are both risks and opportunities to consider in that space.
Absolutely. It's a complex and dynamic situation. But that's what makes it so interesting, right? There's always something new to learn and new challenges to tackle.
So it sounds like the key takeaway here is to stay informed. Be aware of these global trends and how they might affect your investments, your career choices, your life in general.
I think that's a great takeaway. The world is changing rapidly, and those who can adapt to new realities will be the ones who thrive.
It's like we're all sailing in uncharted waters. We need a good map, a skilled crew, and the ability to adjust course when necessary.
I love that analogy. It perfectly captures the spirit of what we're talking about.
And speaking of uncharted waters, I noticed that the report doesn't really go into much detail about how all of this might affect specific industries. It's more focused on those big picture trends we've been discussing.
That's true. But maybe we can read between the lines a bit. What are some sectors that come to mind for you?
Well, I'm thinking about industries that rely heavily on global trade, like manufacturing and agriculture. It seems like those could be more vulnerable to these trade tensions, right?
Absolutely.
Right.
Think about industries with those really complex supply chains that span multiple countries. Any disruption in those trade flows could have a huge domino effect on their operations and profitability.
Right. A tariff in one country could end up increasing costs for a manufacturer halfway across the world. And then those costs get passed on to consumers, and suddenly everyone's feeling the pinch.
Exactly. On the other hand, industries that are more domestically focused, like healthcare or technology, might be a bit more insulated from these global trade winds.
That makes sense. If most of your business is happening within one country, those global trade tensions won't have as much of an impact. It really highlights the importance of diversification, both in terms of investments and career choices. Don't put all your eggs in one basket, right?
Precisely. Spread your risk, explore different options, and be prepared to adapt as this global landscape shifts.
So to wrap things up, it seems like the message here is cautious optimism. There's definitely potential for continued global growth, even with all this trade uncertainty swirling around. But it sounds like being informed, strategic, and maybe even a little bit adventurous is more important than ever.
I couldn't agree more. And here's one final thought-provoking question for you to consider.
I love these. Let's hear it.
Imagine a scenario where the U.S. does go ahead and implement those large-scale tariffs we discussed. Think beyond just the immediate economic impact. How might that reshape global alliances? What new partnerships or rivalries might emerge? Could we see a shift in global power dynamics as a result?
That's a really interesting question. It makes you realize just how interconnected the global economy is and how even seemingly isolated policy decisions can have far-reaching consequences.
It's something to keep in mind as we all navigate the complexities of 2025 and beyond.
Well said. Thanks for joining us on this deep dive into the global economy. Hopefully you're feeling a little more informed and prepared to navigate whatever comes next.
My pleasure. Always happy to share these insights and get people thinking about the bigger picture.
And be sure to tune in next time for another fascinating exploration of the forces shaping our world.
And for China, those potential tariffs could shave off almost zero point 0.7 percentage points from its growth in 2025.
Wow, those are some pretty big hits. So why exactly are these impacts so much greater outside the U.S.? What's the reasoning there?
Well, it comes down to a couple of things, mainly just how much these countries rely on trade with the U.S.
Yeah.
compared to how much the U.S. relies on them.
Right. So if the U.S. sneezes, the rest of the world catches a cold.
Kind of, yeah. And the other thing is that a lot of these countries, especially in the Euro area, their economies really depend on those exports to the U.S.
Right. If Americans start buying less stuff from overseas, those businesses are going to feel it.
Exactly. And the report even mentions that some countries could actually benefit from this whole trade shift away from China.
Oh, yeah, I remember that from the outline. How does that work? Who would benefit from that?
So basically, as the U.S. imports less from China, it opens up a gap for other countries to step in and, kind of take their place.
So, like, other countries that produce similar goods could swoop in and take advantage.
Exactly. We could see manufacturing and production shifting to Southeast Asia, for example.
Yeah.
Or even back to the U.S. in some cases.
Okay, so there are winners and losers in this whole thing. It's like a big game of musical chairs.
Yeah, that's a good way to put it.
But for the listener, the person who's maybe not an economist or a trade expert, what does all this actually mean? How does this global economic picture translate into real-world implications for them?
Yeah, that's a great question. I mean, we've been talking a lot about GDP and inflation and tariffs, but how does this stuff actually affect people's lives?
Right. Because at the end of the day, it's not just about numbers on a spreadsheet. It's about jobs and investments and, our overall financial well-being.
Exactly. So let's imagine you're an investor looking at the global landscape. This report suggests there are still a lot of opportunities for growth, even with all this trade uncertainty.
But you have to be smart about it, right? You can't just throw your money anywhere. You really need to understand how these different regions and sectors are being affected.
That's right. You have to do your research. For example, if the U.S. economy does as well as they're predicting, there could be some really great investment opportunities in certain U.S.-based industries.
Right. But then on the flip side, you also have to think about the potential downsides. What if those big tariffs do actually happen? How's that going to mess with global supply chains? And consumer prices, could that wipe out any gains you might have made?
Exactly. And it's not just about the U.S. You also have to consider what's happening in other parts of the world. Like, what if growth in the euro area slows down? What does that mean for European companies and for investments in those markets?
And what about those emerging markets that might benefit from the shift away from China? Are there opportunities there, or is it too risky?
Yeah, that's a whole other layer of complexity. It's really important to stay informed and pay attention to these trends.
So for the average person who's not necessarily an expert on global economics, what's the best way to stay ahead of the curve?
I think the most important thing is to stay informed. Keep up with the news, read articles from reputable sources, talk to financial advisors if you have them. Just try to get a sense of what's happening in the world and how it might affect you.
It sounds like being adaptable is really key here. The world is changing so fast, and, those who can adjust to the new realities are going to be the ones who succeed.
Absolutely. It's all about being flexible and willing to learn and grow.
It's like we're all sailing in uncharted waters. We need a good map, a skilled crew, and the ability to change course when we need to.
That's a great analogy. I like that a lot.
Speaking of uncharted waters, I noticed that this report didn't really talk much about how all this might affect specific industries, beyond those broad trends we've been talking about.
Yeah, that's true. It's more of a big picture overview.
So I was thinking about this and I was wondering, which industries do you think would be most vulnerable to all this trade uncertainty?
Well, off the top of my head, I'd say industries that rely heavily on global trade, like manufacturing and agriculture.
Right, because their supply chains are so spread out.
Exactly. They're really interconnected across multiple countries, so
Yeah.
any disruption in trade flows could really mess things up for them.
Right, like one little tariff in one country could end up costing a manufacturer a fortune halfway across the world.
Exactly. And those costs ultimately get passed on to the consumer, so everyone ends up feeling it.
On the other hand, I guess there are some industries that are more insulated from all this, like healthcare, for example, or maybe technology.
Yeah, those industries tend to be more domestically focused, so they're not as reliant on global trade.
Right, so their success is less tied to what's happening in other countries.
Exactly. Which is why it's always a good idea to diversify, both in terms of your investments and your career.
Yeah.
Don't put all your eggs in one basket.
So spread the risk around and, be prepared for anything.
Exactly.
So it seems like the overall message here is cautious optimism. There's potential for growth, but there are also some real risks to consider.
Yeah, I think that's a fair assessment, and it's really important to stay informed to be strategic about your choices.
I couldn't agree more. And on that note, I think it's time for our final thought-provoking question.
I love these. All right, lay it on me.
Okay, so imagine the U.S. does go ahead with those big tariffs. What would happen then? But think beyond just the immediate economic fallout. What would it mean for global alliances?
Hmm, that's a really interesting question.
Yeah, like could it lead to new partnerships? Or maybe even new rivalries? Could we see a shift in global power as a result?
Wow, you're really making me think here.
It's a lot to consider, right? But it's important to think about these things because the global economy is so interconnected that one policy change can have ripple effects all over the world.
Absolutely. It's all connected in ways that we don't always fully understand.
So it's definitely something to keep in mind as we move forward.
For sure. We're living in interesting times.
Well said. Well, thanks for joining me on this deep dive into the global economy. It's been a fascinating conversation.
It really has.
My pleasure. And for our listeners out there, be sure to tune in next time for another deep dive into the forces shaping our world.
It's kind of like, we're all in this little boat together, just trying to navigate these choppy waters.
Exactly. And we need to be prepared for anything.
Speaking of being prepared, I was thinking about this report and how it's really focused on those big picture trends.
Yeah, it's not really industry specific.
Right. So I'm curious, what are some industries that come to mind for you when you think about potential vulnerabilities to this whole trade uncertainty thing?
Well, I'd say manufacturing is probably pretty high on the list.
Oh, for sure. Manufacturing is so globalized these days.
Yeah, and agriculture too. Their supply chains are so complex and spread out across multiple countries.
Absolutely. Any disruption in trade flows could really throw a wrench in the works.
Like imagine if there's a sudden tariff on soybeans or something.
Oh, yeah, that would have a huge ripple effect.
Farmers would lose money. Manufacturers would have to pay more for their raw materials, and ultimately those costs would get passed down to consumers.
Exactly. It's a chain reaction.
So it seems like those industries that are really reliant on global trade are the ones that are most exposed to these kinds of risks.
Yeah. On the flip side, you have industries that are more domestically focused.
Yeah.
Like healthcare, for example, or technology.
Right. They're not as dependent on what's happening in other countries.
Exactly. So they might be a little more insulated from these global trade winds.
Okay, so it sounds like diversification is key here, both in terms of your investments and your career choices.
Absolutely. Don't put all your eggs in one basket. Spread the risk around and be prepared to adapt.
So to wrap things up, it seems like the main takeaway here is cautious optimism.
I think that's a good way to put it.
There's definitely potential for continued global growth, but there are also some real challenges that we need to be aware of.
And we need to be smart about how we navigate those challenges.
Exactly. Well, I think it's time for our final thought-provoking question for our listeners.
All right, hit me with it.
Okay, so imagine the U.S. does go ahead and implement those large-scale tariffs that we've been talking about.
Okay, I'm imagining it.
But think beyond just the immediate economic impact. Think about the bigger picture.
Okay, I'm thinking bigger.
How might this reshape global alliances?
That's interesting.
Yeah, like could we see new partnerships emerge? Or maybe even new rivalries? Could this lead to a shift in global power dynamics?
Wow. Those are some really big questions.
It's a lot to wrap your head around, but it's something to consider.
Definitely. The world is a complex and interconnected place, and sometimes those connections aren't always obvious.
That's for sure. Well, on that note, I think we've covered a lot of ground today.
We have. It's been a great discussion.
Thanks for joining me on this deep dive into the global economy.
It's been my pleasure, as always.
And for our listeners out there, thanks for tuning in. Be sure to subscribe to the show and leave us a review if you enjoyed this episode. And we'll see you next time for another deep dive into the forces shaping our world.